Most young Canadians have tax-free savings account, but only few understand how exactly tax-free works and how powerful it is. So in today's video, I'm going to explain how you can make full use of tax-free savings account, how you can avoid mistakes, what kind of investment you need to make in tax-free savings account, and also how contribution limits work. Hi guys, my name is Charan and I have been investing in stocks and real estate from past 7 years. I have a degree in accounting and finance and I have been able to grow my stock portfolio substantially, and I am also a real estate investor. And it means world to me if you subscribe to my YouTube channel. So I also get inspiration and you also don't miss any future YouTube videos. So back when I was 19 years old, I opened my tax-free savings account. I go to the bank, TD Bank, and they open for me and I start using it. So I was using it as a regular savings account because I didn't have any knowledge how to use it. But I don't want you to make same mistakes that I did and use it at a full potential. So TFSA stands for tax-free savings account. And it's not just a regular savings account. You can invest your money, you can grow your wealth, you can have a capital gain, and you don't have to pay any tax. You can withdraw anytime you want. It's not like a retirement account that you have to pay taxes. And the contribution room for tax-free savings account for 2025 is $7,000. It used to be $6,000, then they increased to $6,500, now it's $7,000. And they are keep on increasing the contribution limit, which is good for us. So before we discuss benefit of tax-free savings account, let's see what kind of income we earn here in Canada. So first is employment income. You go to the job, you earn money. Second is business income. You do business, you are sole proprietor, you earn income, that's business income. And the third is investment income. So tax-free savings account is best for your investment income. And that's what we're gonna talk in this video about, how you can make best use of your investment by investing in tax-free savings account and what mistakes you can avoid. So the growth is tax-free, that's the first benefit. Any capital gain, any dividend, any interest, or even if you invest your money in GICs in a bank, they pay you interest every year, that will be tax-free. You don't have to worry about CRA that they will tax you and then they will find out. And the second benefit is flexible withdrawals. Unlike RRSP that you have to wait till retirement to withdraw your money, or if you withdraw the money right now you have to pay tax next year. In tax-free savings account you can withdraw anytime without paying any extra tax. And the third is you can always recontribute. You don't have to invest all your money in tax-free savings account at once. You can withdraw the money and you can recontribute in the same year or the next year. But the thing to consider here is that if you withdraw, let's say $10,000 today, then you have to wait till the next year. So right now it's 2025 September and you withdraw $10,000. So that will still remain in your tax-free contribution for this year. But whenever 1st January 2025 hit, that you can recontribute that $10,000 that you withdraw next year. So that's the important thing to know. If you withdraw your money, let's say early in the year, let's say March 2025, then you have to wait 9 months to get that contribution room back. So I always recommend that whenever you want to withdraw from tax-free savings account, always withdraw at the year end, in November, in December, or even in October. So you get your contribution room within few months. And the fourth benefit is compounding growth. So whenever you get dividend from the stocks, whenever you get dividend from your investment, or whenever you get interest from your investment, that's tax-free. And then when you reinvest that interest or dividend, then you get the real effect of compounding growth. And the longer you start investing in tax-free savings account, the better your compounding growth will be. And that's the reason they give you tax-free savings account right when you turn 19. And the best thing to do when you turn 19 is open a tax-free savings account and start contributing it. Doesn't matter, $200, $500 a month. Start contributing money in tax-free savings account and then let the compounding do heavy lifting. And the common example is, let's say you turn 20 and then you start contributing $500 into your tax-free savings account right when you turn 20 years old. So now from 20 years to 30 years old, that's 10 years. You're investing $500 every month or $125 every week. So you invested $500 for 10 years. Now you stop investing. You invested for 10 years, now you stop, complete stop. So you invested for 10 years, then you completely stop investing. So from 30 to 60 years, you will have more money. And that's the thing to know. When you turn 30 years old, you stop investing. And now you turn 60 years old, you haven't invested any single penny in your tax-free savings account at 10% compounding growth. Now you will have more money than a person who started later than you, who started at 30 years old. And then he invested $500 a month and then he turned 60. And guess which person has more money? The person who just invested for 10 years, he started when he was 20 years old. So you have more money than the person who invested for 30 years and you invested only for 10 years. You have more money. That's a real effect of compounding growth in tax-free savings account. And let's talk about the limitation that you need to know about tax-free savings account. First is contribution limit. So when you over contribute in your tax-free savings account, Let's say your contribution limit right now is 35,000 and you have like 37,000 in your tax-free savings account, then CRA gives you penalty. So the penalty is 1% on every over contributed dollar you have every month. So that's significant. You need to take care how much contribution limit you have left. And the best way is to not to check CRA account. The best way is that start writing on your Excel or on your copy, so you know exactly how much you have. Otherwise you're going to pay fees every month, and that's a significant portion, and that will reduce your investments. And the second disadvantage is that I didn't know about it when I started investing when I was 22 years old, that if you invest in US stocks, then doesn't matter if it's in tax-free savings account or it's in registered account, you will get 15% deduction on dividends. So let's say you invested in SCHD that pays 4% dividend every year. So now they give you dividend, or they pay you dividend every quarter, and then you get $20 of dividend. Now you have to pay 15% on that $20 tax, and that adds to significant value when you go year over year and go look for decade. When I started investing in tax-free savings account in US stocks, that I thought that if the gains are tax-free, why not the dividends are? But US companies deduct 15% of withholding tax in tax-free savings account. And the best way, if you want to invest in dividend stocks in the United States, the best way is to do through RRSP. So they don't deduct any 15% tax, because US and Canada has tax treaty between them, and you can invest in US stocks, especially that gives huge dividends. You can invest through RRSP. And the fourth limitation is, it's if you treat it like a regular savings account, you just put your cash and then your contribution limit is just filled with the extra cash or your extra savings. So the tax-free savings account, I want to clear is that is just use it for investments. Don't use it for savings. Don't use it for emergency fund. Just use this for your investment that's give you 8 to 10% compounding growth. So now, best use of tax-free savings account, and this is the most important part of this video. How to best use your tax-free savings account. The first rule of thumb is use it for long-term investing. You don't want to do day trading or swing trading in your tax-free savings account. CRA will know for sure. I personally think tax-free savings account is best for Canadian ETFs. So right now I invested in VFB, I invested in some other banking stocks, I invested in Fortis, the companies that gives you dividend. So tax-free savings account is best for Canadian stocks that give you good dividend. So that's the one thing. The second is growth stock. Let's say back in a year you bought Nvidia. Now you're selling it and you have approximately $15,000 gain on Nvidia. Now you don't have to pay any tax on capital gain. And you remember when we earn dividend from the companies, they deduct 15% tax. But in tax-free savings account, they don't deduct anything from your capital gains. So it's best for blue chip or growth stocks or even growth ETFs like QQQ or even SPY ETF. It gives you good growth, so you don't have to pay tax when you sell them. So with the tax-free savings account, let's say you invest in ETF, and not too many people, they invest for short term. So they invest for long-term growth, 10 to 15 to 20 years. So you're not paying any tax when you have unrealized gain. You usually have to pay tax when you invest through your registered account. But in tax-free savings account, you don't have to pay any tax. So all the gains you don't have to show in your income, you don't have to pay tax. So that's best for the growth stock. So the dream portfolio that you can make in your tax-free savings account as a beginner is start investing, let's say 40% in VFB, 40% in XCQT for growth, and 20% in VDY for dividend. Those are all in Canadian pounds, all the dividend, they pay good dividend. They will get reinvested in your stocks with tax-free. So that's a dream portfolio that you can make in your tax-free savings account. You can always add those stocks that you're planning to sell in the next 3 to 6 months. That's a great idea as well. Now, as a young Canadian, how you can start investing in tax-free savings account today. So you don't have to physically go to the bank to open your tax-free savings account. You don't have to make an appointment with a financial advisor. You can just download a Wealthsimple app. Then they give you an option to open a tax-free savings account. Then you can just open it within a day. Now your job just gets started by opening a tax-free savings account. Many people quit, just open a tax-free savings account and treat it like a regular cash or savings account. Your job just gets started. Your next step, put an auto deposit in your tax-free savings account. The next step is to connect your tax-free savings account to your bank account. So every month, every week, or every bi-week, your pay get deposited into tax-free savings account. Now the money that's coming from your bank account to your tax-free savings account, that needs to be invested. So the best way is Canadian ETFs. So the ETF I told you before, the best if you're Canadian and you're starting out. So are VFB, XCQT, and VDY. Those are best if you're starting because you're getting growth, you're getting dividend, and you have stability through VFB. And don't do day trading or don't buy penny stocks in a tax-free savings account. So a tax-free savings account the number one priority should be that you're taking care of your future in your tax-free savings account. Once your future is taken care of, once you have $100,000 in your tax-free savings account or in your investment account, then jump on the risky things, because when you have $100,000, your future is taken care of. If you just contribute $100 or $200 every month, you will easily have millions of dollars when you are retiring. And if you like this video, please give this video a thumbs up and subscribe to my YouTube channel for future content.